Did you know that foreign investors could soon pour billions into India's public sector banks? What is FII holding limit and MSCI inflow, which could be a game changer in coming time for public sector banks in India, and how these changes are going to affect your pockets as well. Hello everyone, welcome to Vajiram and Ravi's Flash News. My name is Shubhangi Singh and today we are going to understand that how India's public sector banks such as SIB, Canara Bank, Union Bank combined are set to gain almost $1 billion in terms of foreign investment. What is the secret behind it? So let us start with understanding with a new update that is expected. The government is considering that they will revise the cap of FII inflow. Now let us break this down. यहाँ पे गवर्नमेंट जो है वो कंसिडर कर रही है कि वो FII का जो होल्डिंग लिमिट है यहाँ पर बैंक्स का जो कि फिक्स्ड है 20% पे उसे चेंज करने के लिए. Now let us understand what is the FII holding limit for a bank. So it is the percentage of the shares that a foreign investor can hold of that particular public sector bank, and that is capped at 20% by the government. Now the government is considering to increase it to 26% or maybe more, but the majority control will not be given to foreign investors. So that means it will definitely in near time be less than 50%. But it is expected that it might go up to 26%. Now the question is why the government does this. The answer to this is financial stability, policy implementation and maintaining the control as well. But FII holding limit is very important because that is where the foreign investment into the banks and especially into the Indian economy comes in from. And the reason that we are considering it to review, because that will facilitate in getting more foreign capital for the public sector banks. It will help in boosting the valuations for the government owned banks, and also it will give encouragement so that there is better inclusion of such banks in global indexes. Now this revision itself is expected to bring in more foreign capital. But once this limit is revised, then there will be more weightage, more inclusion of these banks in global indexes like MSCI. Now when we are talking about MSCI, this will spur another phase of where foreign inflow, FII inflow would be seen. Now how is that possible? I explained you, if the government raises the limit, then we are expecting foreign capital. But how are we expecting foreign capital through a global index? Now let us understand that. So when we are talking about MSCI, what exactly is MSCI? MSCI is nothing but a global index. MSCI, that is Morgan Stanley Capital International. So when I am saying that it is a global index, it means it is a scorecard of the stocks that are available across the globe. तो यहाँ पे अगर MSCI जो है वो एक स्कोर कार्ड है, basically it is an index. Let us understand it like a scorecard because that will simplify it for us. So if we have a scorecard present in front of us which shows us the best global stocks, then obviously the foreign investors or the investors in general would want to invest in the stocks which are showing, which are being reflected, which are being included in this global scorecard, global index, that is MSCI. So if with the changing of FII holding limit, we get more inclusion in MSCI or the weightage of PSBs is increased in MSCI, we are going to get foreign capital inflow because foreign investors and foreign companies and foreign banks would want to include what is in the international scorecard in their portfolio as well, and they would start investing. In the past, whenever there has been inclusion of any bank or the weightage of any bank or any other stock in MSCI, India has seen a positive inflow of foreign capital. For example, when back in 2023, HDFC Bank, when it had the merger with HDFC Limited, was brought on the MSCI index, it showed positive inflow but that was adjusted because of the merger as well, and there were further factors involved. So basically, just to summarize, it is a scorecard, it is a global index. If any company or bank is included in this index, that means the other indexes would want to include them, investors would want to buy the stocks, shares, and it will see the foreign investors investing in this company or the PSBs, and that is why when we are talking about MSCI inflows, these are passive investments. Now, in context of this particular revision that we are talking about, especially PSBs such as State Bank of India, PNB, Bank of Baroda and Canara Bank could expect millions of inflow in terms of foreign capital if FII holding limit is increased, and then we also have it clubbed with MSCI inflow that will happen as a consequence. SBI alone will get $466 million as per the Nuvama estimates that have been brought in. So this seems like a good news for Indian economy here. Now let us understand that what is the impact. So when we are talking about the impact, first one being there will be a direct boost to market liquidity. How? There will be increase in the volume of, as there will be more foreign money will be flowing into the market, and it will also help that volatility which is involved, that will see a dip. Next, we'll see strengthening of PSU's bank. As there will be more investment, their valuations will increase, which will also make it easier for them to procure better capital, arrange capital that they can invest in their businesses, in the infrastructure. Furthermore, it will directly support rupee stability. When we are talking about rupee stability or foreign exchange rate, we always have to keep demand and supply in consideration. When we are getting more forex supply, that means foreign money is coming in, that means it will directly help us with forex reserves. There will be more supply of dollar, and this will help us in strengthening rupee. And all of these factors such as inclusion of PSBs in MSCI, furthermore strengthening of our economy will boost the trust that is present of foreign investors in the Indian financial system, because investor sentiment is the most important thing, be it foreign investor or domestic investor, for the confidence building of any financial system of any economy. Now, if we are talking about the positives, let us also understand if there are any negative impacts as well. So, when we are talking about negative impacts, there are certain risks also involved. For example, when we are talking about so much foreign money coming in, the dependence on it increases, and because of this, any global shock that will take place will lead to capital outflows, which will leave our economy vulnerable. There will be fluctuations, distortions and market corrections. So this should be kept in mind. Another important thing, when we are talking about MSCI inflows, as I have mentioned, they are passives. How they are passive? If a bank is included in the index, then there will be investment because it has more weightage or it has been included. But if the bank does not have the basic fundamentals which are required to perform, so there is a possibility that temporarily it might see a rise in valuation or the stock prices might increase, but for the long term they will have to focus on structural improvement. Otherwise, nobody can help the status of that particular bank or company even after it is included in MSCI. Other than that, one important factor that needs to be considered to understand that why is this a good news is the fact that yes, there is expectation of almost $1 billion US in terms of inflow when we are talking about MSCI inflow, but it also has impact other than the foreign capital inflow. It will help India with stature, it will make the stability with passive inflows, and the fluctuations or the instability associated with short-term market moves will also be reduced. But this is not a pill which can help solve all the problems that are existing. For example, the bad loans, NPAs, non-performing assets, the loans which are not being paid out, for such problems can only be addressed by reforms. This will not help to change that. The market vulnerability that comes with foreign funds cannot be addressed by this. So structural reforms are required to address the problems that we have in the economy. But all in all, it comes as a positive news because we will be seeing stock market on the positive side, especially for banks. There will be foreign capital inflow and it would be impacting all the components of the economy. Now let us understand how it will be impacting all components of the economy. If we talk about stakeholders, then we have first investors. So if the banks are being included, that means their share prices will rise and there will be portfolio gains which will be seen. If we talk about borrowers, if the banks are getting better profits, they are getting healthier, then we will see that credit accessibility will also increase and it will also lead to easy and cheaper credit. That means the borrowers will be able to get credit at a lesser amount. Interest rates might also see a dip. Then if we talk about taxpayers, it also has an impact on them. How? So when the public sector banks are not able to maintain their profits because of non-performing assets or need some sort of recapitalization or help, who comes in? Government comes in. Government has to recapitalize. Government has to put their money. Where does government get money? Government gets money from you all who are paying the taxes. So in this scenario, if the banks are performing good, the fundamentals are good, recapitalization would be less required. That means saving taxpayers' money and using it in the places where it is more required, such as addressing poverty, such as addressing malnutrition, infrastructure, repairing roads, etc. And this all will have a direct impact on economy as well as jobs. As if the banks are strengthened, that means there will be more credit availability, there will be more credit facilitation, which will push for better profits, there will be economic growth, and if economic growth has happened, then there will be demand generation. Demand generation will lead to more production and that will lead to more jobs. So overall, this MSCI inflow and the revision of FII holding limit seems like a good news. How it turns out, that we will get to know with the other fundamentals, reforms and the numbers that show up in coming time. Now leaving with you a prelims MCQ, consider the following statements about MSCI inflow. First one, MSCI inflow refer to automatic foreign investment in Indian stocks when they are included or weighted higher in MSCI indexes. Then MSCI is a global credit rating agency headquartered in New York. Third, we have MSCI inflows are a type of passive investment by foreign institutional investors. Then you have been given options. You can put down your answers in the comment section. That was all from my side. Thank you so much.